so fast, all tied up like a captive. I'm on to you. Used to pay to my mom life, standing on rainbows, playing it cool. I haven't felt this in ages, and I've no more patience. So won't you please stay a bit longer? You're making me stronger, making me stronger. Stay a bit longer. You're making me stronger, making me stronger. You need stronger.
Let me fix everything for you guys. Everything's gonna be good within the next 2 minutes. Alright, I got the connection working good. We good. Let me go ahead and put on my camera. How you guys feeling? We should have everything good to go within the next 2 minutes. I know you guys have been waiting. Here's my face. Just so y'all know I'm here. And I'm on stream. I'm on time. I need everybody to drop your cities in the chat, because we're gonna go ahead and get this thing started. I'm gonna mute myself and give Mr. Lex Waves like 2 minutes to hop on. I don't see any of you guys dropping those cities, so I don't know what's going on. That's fine. I'll be right back.
I know you don't love me like you say you do. I know you don't love me like you say you do.
You hear me nice, loud and clear? Testing, testing, one, two, three. Profit Society. What's up, fam? How we doing? What's good? Shout out to Big Kyle's the Don. What's up, man? How you doing, brother? Yeah, 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 man. So we got quite a few things today to cover, family. Today I definitely want to touch on a major topic, which I think a lot of people get confused about, Kyle, but we're here to just clear up all the nonsense and so forth so that people can have the proper education to filter through these economic times, especially, that Trump's in office and then just the constant back and forth between them and the Fed, and just how to interpret the data. That's most importantly is okay. Well, hey guys, like like Lex, what does all this red folders, orange folders, what does all this mean? They actually do mean something. So, without further ado, we're gonna dive into that just now. So, guys, how does that sound? You know? All good? Most importantly, remember, guys, we're already there, so this is really to get, everybody jump started who's, maybe struggling a little bit to understand these philosophies. You know what I'm saying? All right, perfect. So, I guess I could take over and share screen. Yep. Mhm.
Here we go. Here we go. I was muted on the stream. But what I was saying, guys, is I want everybody to drop a 1 in the chat if this is your first time here on this stream. And if you're part of the Noti gang, you've been here for a while, you've been subscribed to the Profit Society, go ahead and drop a 2 in the chat. Drop a Noti gang in the chat. Because I see a lot of loyal subscribers to the channel, but I also see a lot of new faces. And for you guys that don't know a little bit about myself, I've been trading in the space of trading for about 6 years now. I don't like to hone things down to a certain market or a certain entity or a certain company, right? We're in the financial space. We're in the economic space.
Yeah.
We're in the money space, right? You can make $1 million in a million different ways in a million different trades with a million different currencies. Not saying that you should or you can do it every single time, but we're in a space where things like that are possible. Now, it's all about how can you benefit from that? How can you extract from the market? Right? One of my biggest mentors, Alex Morin, always said, it's not about what you can do for yourself or what you could do, but people only care about what's in it for me, right? What's in this for me? Anybody could talk a big game about Bitcoin, about cryptocurrency, about stocks, Forex, making money online, but what's really in it for you? How can you capitalize off of the movements that happen on a day-to-day with Forex, stocks, crypto? And there's people that have been able to learn in specific information to read, not only just read the charts and look at patterns like every single novice trader is doing, but also read and study deep into the books. Right? I'll tell you what, I know for a fact, Lex has read a lot of books in his time. I have as well. And they always said that the average millionaire, they always said that the average just regular 9 to 5 worker, and there's nothing wrong with working a job, but just a regular average human that makes 50,000 a year, doesn't even have to be a job. You can make 50,000 a year from a business, right? They read 1 or 2 books a year, but the average millionaire reads 2 to 3 books a month. So that just goes to show you that they're always taking on new information. They're always learning, and that's one thing I took from Lex. He's always learning. He's always becoming a student. He's always, even though in this space of Forex and in the space of trading, you can make a lot of money and you can really get ahead of yourself and you can really you can do whatever you want. You have the creative freedom and you have the creative will to make money and just go do what you want with it. But this guy is really grounded, really sticks to the books, really is an OG in the game. I used to watch him on Go Live, my first company, when I was 15, 16 years old, still trying to figure things out. And this guy had certain information that really, really changed my situation. Not only with just the technical charts, but really, really getting into the fundamental analysis. And that's what people weren't able to explain back in the day in IMO. Right? I remember NFP was last week, and there were certain educators, and there are still certain educators, that whenever they hear a news release, or whenever they hear red folder, or whenever they hear NFP, or whenever they hear these type of things, it scares them away. And sometimes they even scare their own students away. Don't. Yeah, literally. Sometimes,
and not to cut you off.
Go ahead.
That's no, I really appreciate you and thank you so much each and every single time, guys. So, just not to sorry, not to cut in like that, but you got to understand something. When there's, let's say, just really quickly, when there's news releases and stuff, that means there's volatility. That means the algorithms, because everything is algorithmic. There's no way folks there's a million people just pushing a million buttons or however X, Y is the number of people know. They're all algorithms, okay? And they've been programmed to respond, especially during news events, all right? So you want to just make sure you remember that. Remember, it's an algorithmic delivery process. That's number one. Number two, now, just to reiterate again what Kyle was saying, is there's nothing wrong with it if you know what you're doing. That's the key thing, is if you know what you're doing, okay, that can provide opportunity. There's specific times, these algorithms, they're timed, as a matter of fact, okay? When the news comes out, initially, we want you to go this way, all right? The price will go that way, and then, but, that's most likely masking the real move, That's not the real move. That's to get folks to bite and chase. All right, get them, throw them pretty much off guard, get them to chase. Oh, this is a reversal. Oh, yes, it formed this pattern. Meanwhile, the market was just clearing some liquidity or rebalancing a specific price point, and that's about it. So, again, I like when there's volatility. Okay, will the price whipsaw back and forth, go up and down? Oh, sure, absolutely. That's what it's designed to do. That's what it's supposed to do. That's the objective, is to get people confused and so forth. So as far as I'm concerned, job well done. All right, and so forth. But then again, let's put on our lenses. Let's take our time and dig a little deeper. You know what? And as a matter of fact, we're gonna go over those things, okay, in this stream today. So, again, grab your notepads, grab your pens, grab your coffee, your tea, your juice, whatever stays you afloat, old school line, and let's lock in. So, um, Kyle said fundamentals. Okay, what it basically is fundamentals? It's pretty much a macro understanding of the market. Okay, what's the driving factors? What's driving the price? Okay, you have your technical chart. You can understand a pattern whenever you see one, right? Yes. But what is the motive behind it? What's driving it there? Okay, usually they're a combination of several things. They're going to be a combination of interest rates. I believe the last time I spoke on this stream, I spoke about interest rates just really quickly. Interest rates, okay, bonds, okay, and so forth. Then we have the players that are in the game, the central banks, and then obviously the commercial banks, okay, and then, you know, I think a department that a lot of people overlook is the U.S. Treasury. Yes, the Treasury. Yeah, they're very important. Oh, absolutely. They're extremely important. All right, but like I said, we'll get to that. So I think this is now the broader topic today that we'll be discussing is inflation. Okay, as you can see, Kyle, let me share my screen.
Go ahead. You
Okay,
got host.
so let's go. Let's go ahead. Okay, what is requesting a bypass?
Everybody go ahead and drop a 777 in the chat if you've been getting some value so far and you're excited. And feel free to drop a like and subscribe.
Yeah, man, we appreciate
Completely free. We've got about 16 of you guys on here. If all 16 of you guys like this stream right now and go ahead and drop a sub and just get active in the chat, I promise you within the next 10 minutes or so, we'll have at least 30 people on here. So let's get active, guys. Take it away, Lex.
Okay, my brother. So, a good topic today within this discussion is inflation. All right. And I want to talk about, well, what is inflation? A lot of people get it misconstrued is when they say, when you hear the word inflation, oh, oh, yeah, price is going up. Wrong. No, that's not inflation. Inflation is obviously what? Hear the key word, inflate. Inflation is an increase in the money supply. Okay? What do they always tell you? Traditional saying. If you want to find out something, what do? You follow the money. All right? Who's funding the activity? Once you can figure out where the funding is coming from or where the funds are being distributed, then you can find the answer. All right, you can find out, obviously, what you need to find out is the money supply. So that's what inflation is. Inflation is obviously the increase in the money supply. Now, what happens when you have an increase in the money supply? What is the outcome of that? That means you might have more dollars, more capital chasing the same or fewer goods and services. Let me say that again. You're going to have more money, more capital chasing the same goods and services or less. That, as a result, will drive up the price, okay, of assets. That will drive up the price of the cost of living. That will drive up the price of day-to-day expenses, day-to-day day-to-day goods. All right, and other things as well. So just so you have a general idea, again, one more time, inflation is the increase in the money supply. All right, make sure you understand that. Okay, so what do we have coming up this week? Okay, Um, Especially if you're a day trader or swing trader. I don't care really much what market you trade. It doesn't really matter. You have to have some sort of data, okay, to focus in or hone in on, and you just want to be aware of these volatile moments within the markets on a specific day. So Wednesday, what do we have? We have inflation. All right, we have the inflation report. Inflation report comes out every month. All right, where they track it month for month, year for year. All right, and then core, that's excluding food and I'm sorry, cores. It'll tell you right here. I'm sorry, my bad, guys. It tells you what exactly it is. Obviously, with yes, I was right, excluding food and energy. So, again, these things are being tracked by obviously the central bank. Now, let's dig in really quickly just to recap what the Federal Reserve is, what their mandate is. Okay, they're the ones in control of the what? The money supply. So they're very key players. Okay, what is their mandate? See, a lot of people only know of two mandates. Okay, they only know of two mandates. Now, mind you, like I said, hey guys, look, this is crucial, pivotal information we're giving away for free. There's people who charge you thousands to learn this shit, man. Real talk. We're giving it to you for free. We're providing you value for free. All right? We're not asking you for anything in return. Free. So again, you have obviously like I just said, inflation, the money supply. Now the Feds, their mandate is for stable prices. Well, what does that mean? Stable prices is exactly what it means. Keep prices reasonable from getting out of control. Okay. Second mandate, maximum employment. All right. They want to make sure that the workforce, the labor force, is maximally employed. You ever wondered why? Hmm? You ever wondered why they want to keep people employed? So they can tax people to death. They say there's two things guaranteed in life. That's death and taxes. Yes, you're speaking from an OG. You understand? And then that's number two. So, all right. But really, I'll let you know a little secret. It's to really pay the interest on the debt. That's what it's for, if you didn't know that. And that's why that's important. We'll talk about that later. And then the third mandate, which I think, a lot of people aren't even aware of. Yes, they have three mandates. That is long-term stability and longer-term interest rates. Stability and longer-term interest rates. What do you mean by that, Lex Waves? I'm talking about the 30-year yield, the 20-year yield. Those have real life effects on mortgage rates, auto loans, and other credit cards. All those play a factor into obviously where the cost of servicing debt, the cost of money. Yes, money has a price tag. That's what the interest is for. Okay. Now, once you begin to understand all these dynamics and how they play a role in, obviously, how they play a role in either raising interest rates or cutting interest rates or increasing the value of the currency or devaluing the currency, then you start to get a broader picture, a broader spectrum. Okay, now everything I just spoke about, well, why would that be useful to me in trading, Lex? Because you can determine a higher time frame trend directional bias. That's the importance of that. Higher time frame trend directional bias. That's what all of that is for. That's what it leads down to. Okay, very good. Okay, we have this. So inflation, you can always come to the left and you can see here, click a chart to see if it's been trending down. So ever since we peaked back in I believe 2021, 2022, we see that obviously it's been steadily coming down. Okay, well, that's great and all. That's nice. It's been coming down. So if it's coming down, well, then there's no need for you to keep the interest rate that high. What's the need? Why? Why should you keep the interest rate that high if obviously inflation is coming down? So now, well, what would that mean for us? All right. Okay, so pretty much this is the 10-year bond. All right. You have the federal funds rate, which is currently sitting at hold on. Give me 1 second. All right. Give me a second here. Hold on. Give me a second, family. CME. All right. Much grew. Okay, very good. So, currently this is, you can always come here. This is free. It's a CME Fed Watch tool. This is basically tracking this tells you the probabilities of whether there'll be a rate cut or a rate hike. All right. I don't really care so much to constantly keep looking at this. I just know where the where the federal interest rate is right now. So right now, okay, it's at 4.25 between 450. Okay. All right, and so forth. That's where it is. 4.25, 450. So basically, they want rates to come down. Now, why would that matter? Okay. So if the interest rate currently where it's sitting right now, right? That's the cost to service the debt. Okay. Now, if they start to cut interest rates, all right, that means as an investor, okay, investor, trader, it doesn't really matter. As an investor, you're going to say that, well, hey, currency seeks what? Yield, correct? Currency seeks yield. So as an investor, I'm going to say to myself, well, I want the highest return for my money. Okay, so if I'm loaning you my money, I want solid return. So if I notice that the Fed is going to begin to cut interest rates, well, I'm going to start seeking somewhere else where I can get higher yields, all right, or higher return. Most likely that will lead into an opposing currency or obviously opposing asset, like, such as, well, gold is not, gold is basically a store of value, so not so much gold, but maybe the European Central Bank, they're going to most likely stop cutting interest rates, and maybe they're going to start raising interest rates due to their situation. So essentially, you always want to be lockstep for step with. You hear me, brother? God. Okay, yeah, I do want to make sure because I think something happened. You know what I'm saying? So, okay. Okay, I got you. No worries, no worries. So, guys, again, this is real crucial because once the Fed set like a target, they say they'll always give you a target. Like, okay, once they've reached pretty much a threshold or they're close to their objective, like, okay, 5% is at the upper end of the range and the lower end of the range. So pretty much they say 5% or over 5.25, that's the upper end. So chances are once they've gotten to that objective, when obviously all that money printing that happened back in obviously the COVID, and this is the result of all the money printing, all right? Right there, you had a devaluation of the currency from all the printing. And then what happened? Consequently, you had an explosion, obviously, in the price because the demand of those dollars that are due in dollar debt had to come pay due. But anyway, that's not important. So they pretty much got up to 5% at that point. All right. Right around, let's say, September 2022, a quarter situation. Let me just go over here. All right. Let me go back to that. You notice something here? Hmm? You notice something there? All right. When they got down there, what happened when obviously at the end of COVID and they printed pretty much all this, or when it obviously pretty much began or leaning towards that. All right. What happened there? You notice that the price of obviously the yield started to go up. All right. The yield on the bonds started to go up. The yield. Okay, what is the yield? That is obviously the return, obviously your return on that bond. So if obviously yields are appreciating, that means the value of the bond goes down. But anyway, I just want you to focus pretty much on the relationship between the yield, obviously, and the currencies, because currency seeks yield. All right. So during this time, when obviously the government had to start offering higher asking for pretty much nobody was buying the debt. All right. So if no one's buying the debt or nobody's purchasing the bonds, traditionally you have obviously the players. China constantly used to buy bonds from us. They don't buy anymore. All right. Japan is the U.S. as the largest obviously holder of U.S. treasuries right now. All right, and so forth. So it was always touted as the U.S. dollar, the U.S. Treasury market as the Goldilocks or the safe haven of the industry, the standard. But that's not the case now, right? It's not. Okay, very good. So obviously you've seen the yields increase, okay? Now, typically when yields increase, like I said, traditionally, the currency should go along with it. It's not always 100%, but traditionally it would work that way. But in the event, what has happened or what has transpired here, notice that I'm constantly coming back to here because this also serves as a directional bias, all right, to where the currency can go. All right. Now, again, I think it's fair to say that this has been in an uptrend. All right. It's broke out of a what? A plus 40-year downtrend. Okay. And so forth. So now, well, okay, I understand what you're saying. I got that now. Well, what is this relationship to now, let's say the safe havens? Well, if the yield keeps going up, all right, that will most likely, now mind you, this is the treasury now. The treasury controls this, and then the feds control pretty much the money supply. So if this keeps going higher and higher, well, what will happen, or what is that telling me? Okay, this is like a bread and butter play now, guys. All right, pay attention. So if the yield is rising, that means that there are not enough buyers. Okay, that means the supply is outweighing the demand. All right. So again, if they want to buy, all right, US treasuries, or they're thinking about purchasing, whoever it may be, it could be obviously individuals, obviously hedge funds, pension funds, foreign investors. They're not going to buy at these current rates. Why wouldn't they buy at 4.25, near 5? Why? Because they are scared that what inflation, okay, again, they're afraid that inflation is obviously going to increase in value over the time. I'm sorry, inflation is going to go up. And that is a nasty thing when inflation obviously rears its ugly head. It gets very, very disgusting. Okay. All right. That causes real economic hardship. All right. This is even more important why you should take a step and get involved into markets and trading and investing, period. All right. Because you're going to get killed by inflation one way or another. Like I spoke to Kyle about this earlier today, and I said, there's no way out this time, ladies and gentlemen. I'm not being like, I don't want to be the bearer of bad news, or I don't want to be like what's the word? A pessimistic person. All right. Pessimistic person, but there's no way out this time. All right. So we have to take action. We got to do something now. All right. So now that we understand that, and obviously if the yields are increasing, well, I want to protect myself. I want to hedge myself and protect myself from that inflation, from the rising interest rates, from the rising cost of debt. And how do I do that? I look to what? I would look to traditional safe haven assets. Gold. You notice something? Hmm? You notice something when they started raising interest rates? What happened to the price of gold? This is around the same time. What has happened to gold since? It's absolutely went on a parabolic tear. Okay? I've never seen this metal move like this so aggressively in such a short period of time. I don't think, let me let this register to you. Okay? Gold is, 1 ounce of gold is currently trading at what? 334, 35. Well, I mean, the peak at what? 35, whatever. Okay, that same ounce of gold, ladies and gentlemen, about 40, 50 years ago was how much? Hmm? Before some of you were even born. That same ounce of gold was trading somewhere around here. Even lower down here when Nixon took us off the standard. What's changed? The gold hasn't changed. It's the same gold that they dug from the ground, or it's been the same gold from 3,000 years ago. The gold's still the same. What happened? Pay attention, family. Again, pay attention. What I'm asking you, what happened? If the gold is still the same, then why does it cost so much more so many years later? Why? You're being killed by inflation. They're inflating the currency away. And there is a price to pay for that. Okay? So basically, they are robbing us. Well, not us, because we know better. You know better. They're robbing folks of their purchasing power. Your purchasing power is being taken away from you. Okay? Because you're going to need more dollars to buy what? The same goods and services as I explained a little while ago. I need that to register in your brain that they are basically deflating they're inflating the currency away till it has essentially damn near no value. And because everything is priced in dollars, gold is priced in dollars, oil is priced in dollars because it's a dollar-based system. Well, what will happen to those asset prices if you're devaluing the currency? What happens to those assets? They increase in value. So as the dollar goes lower, assets will do what? They will increase. Why will they increase, Lex? Because of the inflationary pressures. So if I'm an investor now and I see that inflation is persisting and it's going to be a problem, well then how do I know what the Fed is going to do? All right. How do I start to bring this into the chart for a technical setup? How do I take this information, compile this information, and lead me into a bias, as I said earlier today? Well, what's going to happen? Hold on, Fab. Hold on. Let me see here. What's going to happen consequently is if the inflation now has bottomed out, I think it has, and it's going to start rising again. See, this time, you don't have the luxury of raising interest rates. Interest rates are already too high as is. You see, we all, okay, you see, let me just come here real quick, okay? You see, these markets were created on a foundation of a bubble economy, what I call a bubble economy. Artificially low interest rates is what drove this market higher. The equities, period, asset prices, period. But a lot of people's wealth is tied to this. So if this begins to fall or becomes a lot of individuals' wealth, a lot of companies, remember, these are the all these companies that are in here, Nvidia, Apple, I'm sorry, Microsoft, Google, all these guys, they're here. This is their baby. So now what happens if you raise interest rates? Okay, what happens? Which they're not going to do, even though the stupid ass Fed, the dumbass, yes, I'm saying this on this video, the dumbass Federal Reserve, Jerome Powell, hope you hear me, you should be raising interest rates, but you can't. Because why? We can't take that level of calamity. We can't take that kind of heat. All right. Now, what will happen? Sorry for the little rant, but what will happen now? Let's just say if they did raise rates, magically they somehow raise rates. What in the world do you think will happen here? These things will come tumbling down. All right. Why? Because you think, hold on, I think a lot of people have it misunderstood. You think the United States is the biggest buyer of these folks' stuff? My man, there's a whole third world out there. Okay? It's their international markets. That's what matters. So if you raise pretty much the price of the dollars, okay, that means these folks cannot service their US denominated debt. So they're going to have to sell their local currencies, panic, okay, and start to sell like crazy. And then if they're selling drastically, well, then what will happen to the price? I mean, I'm sorry, what will happen pretty much if they're going through economic hardship? That means they can't buy shit. Period. They can't buy nothing. How are they going to afford to go buy this new laptop, this new phone, this new technological advancement if they can't even afford regular goods and services? Remember what I said about the common goods and services are going to cost a lot more money, right? Because you're not going to have that expendable capital at your disposal, right? You're not. Okay, so that's how that would tie into there. But let's get back to the point. All right. I said to you that this is going to tick up. I believe, this week. I have a prediction that this will might tick up this week. All right. It's what's saying there. But you're not going to be alarmed on news you already know. All right. Now, pretty much how to, like, let's say, play the news. Like, here's one thing I look at. All right, is I look at what the obviously forecast is. Now, is if there's a big deviation away from that, like let's say if this comes in at 2.7, oh my God. All right, that's astronomical. Okay, so you're definitely going to see a very aggressive response. Or obviously, if it comes in lower, all right, if it comes in lower than what is projected or anywhere near this and or below this, even though it won't, then you will see obviously price go aggressive in the other way. Okay, now let's get to pretty much charts. Okay. All right. I just need people to understand um, why economic data is important, because it will drive, again, it will drive the price. Okay. So pretty much the dollar, we can safely say it's been on a downtrend. All right. I want to use this dollar. I like this one better. Okay. Why do I like this one better? Because this has more of a ratio 1-to-1 to the currencies. So there is a point of interest here that I'm very much interested in. This is the Dow dollar, by the way, the Dow Jones dollar. There is a unhealthy, unmitigated price levels here. You can see that. That's clear as day. This is the monthly. All right. This has not been traded evenly. There is no sell side that has been offered here. So in my eyes, that is a draw. Okay, that's where the price is ultimately gravitating towards. And then on top of that, there is a lot of liquidity here that I feel like needs to get dealt with, essentially. Okay, there's a lot of sell stops down here. All right, look, I don't care. Then the reason why I'm even putting a trend line on this chart is because it's the illusion to sell the narrative. Oh, every time it hits this trend line, buy it. I hate that narrative. Okay, and so forth. Price is not gonna move because your little trend line is here. Price is not moving because of that. All right, not at all. But again, it's just I want to see what from a retail perspective the visuals are. But again, there is a clear reference point here, and I expect the market to trade there. Now, granted, we've pretty much after following this, I would ignore this, all right, and just see this as pretty much a gap. We traded to a threshold, nice little rejection there. See, and you saw this. This is exactly what I mean by, paying attention to the narrative. Okay, so bringing my fundamental analysis over into here, I know that obviously the dollar's in a bear market based off what they're doing. They're inflating the dollar away. So therefore, I should not be thinking up. I should be looking for distribution and ignoring, obviously, when the price rallies. I should be looking as another opportunity to distribute the price, because that's exactly what has been happening since about the start of the year. Price has just been distributing. Every time we reach a higher time frame point of reference, all right, up close, we just keep distributing. We keep going lower. We're making obviously lower lows, lower highs, lower lows, lower highs. You get the point. All right. And now just looking a little bit at a little closer lens. Well, do you see any sell side offered here? I don't. There's a big ass gap right here. But regardless, sellers were not allowed to participate here. They weren't. The algorithm remembers that. It will use that as a reference point to come back to. All right, there's relatively twin lows, or obviously there's a pool of liquidity sitting below these lows. Have we gotten there yet? No, we have not. Are we going there? Absolutely. Yes, I said it. So what? Yeah, I'm that confident it's going there. It's not arrogance. It's just paying attention to, again, the narrative. All right. Oh, but Lex, my indicator says give a damn about your indicator. Market doesn't care about this. I mean, granted, you could use it as obviously, a confluence. Don't care about that. Don't care about that, bro. All right, they don't. It could keep going, and this could sit right down here. They'll move it when they're ready. Kyle, it's about to be a minute, so just stop it and then set it. Yeah. All right. Yeah, I was clocking it. Guys, don't go anywhere. We're getting. It's crazy. No doubt, dog. Yeah.
Muted. Okay. So I was muted. My bad. So I need to go ahead and switch Zoom links real quick. Give me just 1 second while I go ahead and do that. You guys can hear me now? Go ahead and drop a 777 in the chat if you guys can hear me. All good. I'll be honest. We had a quick break. This is just a quick break. Everybody drop a 7 in the chat if you've been getting some value so far, which should be all of you guys. All 20 of you guys should be dropping a 7 in the chat. The Zoom is going to be back up right now. I just have to get him this link. There we go. Alright, we're good. You know, streaming, guys, is something that you guys will learn with time. You know, it does take effort. It does take time, energy, money, and effort to actually go ahead and do these things. You know, honestly, doing streams for free just doesn't really make any sense whatsoever. But I like to do them really just out of the kindness of my heart, just really out of like showing value. And if there's any way that you guys could support this stream, it's just by going ahead and dropping a 7 in the chat and letting me know that you're getting some value. Or just by dropping a like on this stream. Or just by dropping a sub to the channel. Joining the notification gang by clicking the bell icon. Right, either one of those things show me support and gratitude. Especially going in the description link and signing up to my Hanko Trade link. If you guys have a trading account with Hanko Trade, go ahead and move your account under my account, or make a separate account just to rock with my services. You know, all of you guys know all the links are in my bio and in the description. So again, if you guys are getting some value, go ahead and drop a 7 for my boy in the chat, because he really deserves it. We got 20 of you guys on here. If all of you guys drop that 7, like the stream, join the Noti gang, we'll be at 30 real soon. I'm already knowing. So, bro, go ahead and take it back.
Yeah, man. You can hear me?
Yes, sir. You're good to go.
Yeah, beautiful. So, like, yeah, that's right. So, yeah, sorry, family. So, like what I was saying before is just pretty much as I said, they don't give a damn about your indicator. When they're motivated to get somewhere, they're motivated to get somewhere. All right. Price is obviously always going to be delivered to a specific price point at a specific date at a specific time. Usually, when you see these long rejections and these long wicks, that's typically a manual intervention. All right. That's them going in there to manipulate the price. So I do believe the draw is here. All right. I do believe the price is motivated to reach into that and rebalance out that area. All right. Now, what the price does when it gets there, is, we'll see. Okay. But pretty much that's my projection. Okay. Whether we bounce, or pretty much we trade. It's going to be tough to tell me that they're going to trade below there. All right. That is a major infraction point. Okay. Like I said, when it gets down there, but I don't care about, again, I'm not focused on the projection. If you know if you have a strong conviction that something is going to go that direction, well, why don't you trade in that direction? You get what I'm saying? In a sense. So it's like, we focused on the short-term opportunities that comes into the intraday situation. So if I believe, again, that the higher time frame narrative is for them to reach down into here, once again, let's get there. And there's pretty much, you can see why I'm saying that this is a pretty big level, is because you can see here we have something that I recognize very much. Maybe some of you, or some smart money folks, you know what this is. Pretty much a low, high, lower low. We shift. All right. And now we've pretty much returned, we're returning back to a level of equilibrium. Okay. Or the market is seeking to rebalance itself out. All right. That's why I'm just concentrated heavily on that area specifically. All right. Because there's a big level that price has defended in the past. Okay. It took a long time pretty much to get to this area. All right. Once we got up there back in sometime in 16, then we came back up again here in 2020. All right. Obviously, something happened here in 2016. I don't know what financial event happened. And then 2020, COVID, obviously, the dollar fell off a cliff. But then eventually we broke through that area. All right. We broke through that area. So, and, historically, the dollar has been pretty much since the financial crisis back in 08, it's pretty much been on a steady uptrend. So this is why I'm saying now, listen, right now, as it stands, fundamentally, the dollar is following a bearish narrative. But again, you have to ask yourself, and that's something that I ask myself, I say, hey, Lex, is it going to be in their best interest to obviously constantly devalue the dollar? You got to think about that, because at the end of the day, a lot of the extremely wealthy, their wealth is denominated in dollars. All right. Assets are priced in dollars. Keep that in mind. So is it going to be their best interest to watch, obviously, the dollar decrease in value? Okay. And mind you, we're talking about things that are potentially hypothetical, but you still have to be hypothetical in a sense with the directional bias. Now, keep in mind that I also look at monthly situations when it comes to like quarterly situations. We're now in the month of June. All right. So let's kind of dive into those things. All right. These are the kind of macro, again, the macroeconomic stuff that we look at, but these will lead more towards like what a technical situation would look like. So let's go to the dollar. All right, here. So dollars futures contract. So we are aware that in the month of June, typically, historically, right, the dollar performs pretty well. We can all agree, right? Right. It performs pretty well. It does pretty okay. It has pretty much a rebounding month. All right. Again, nothing is set in stone, guys. Again, nothing's set in stone. It's just just be aware of those things as a confluence. All right. It doesn't mean that it has to go, that it has to do exactly that. All right. But just keep in mind, it just could use that as an extra confluence. So that's why I'm saying, okay, I'm just keeping my guard up. All right. We have been falling for, let me see, 1, 2, 3, 4, 5, 6. So pretty much, again, it started the year, 6 months. It's 6 months of straight downtrend. Okay. So This is why I'm still flexible. All right. My draw is down here. I want to see the price get here. Yes. Does it mean that it's going to do this overnight or it has to do it right away? No, it does not. It does not mean that. Okay. As far as I'm concerned, I'm just looking for opportunities to distro down. All right. So now, kind of coming into like more of a daily structure. Again, I don't really like it that much. Okay. Because on the daily now, mind you, I said that to tell you, I don't give a damn much indicator. Yes, you're right. But I'm not stupid. I know what a long looks like, and I know what a short looks like. This is in the middle pretty much. But I don't like the idea that the volume is falling off to the distribution side. That's the side I don't like too much. So I just take things as it goes. As it gives me opportunities, I'll take it. Absolutely. Like, it's on my story right now. I took a position, I saw it, an entry, and I said, okay, that looks valid to me. It met my criteria, so I took a position. All right, and so forth. Scale a little bit off, leave some on. Whatever, what is your objective? All right, so quick in and out, so be it. This is going to ultimately get there this week? I don't think so. It really has to be a big deviation with obviously the inflation figures here. We'll see. But ultimately, like I said, I just am being cautious and being smart that, hey, look, listen, there's a possibility it can rebound. All right. There's some soft liquidity up here that I thought pretty much at the beginning, at the open, I said, let me see if they'll run it. If they'll run it and they come back in the range, all right, because right now we're range bound. If they run it and come back in the range, I'm selling. Period. All right. If not, okay, let's see if they can obviously push and create some kind of obviously price delivery, a price delivery model that I can understand. They did. They pushed lower here, closed below obviously the low of this candle. So I saw that as an opportunity for a bid on EURUSD. Nice move, solid move. All right, nice. Okay, so now I want to I noticed that, obviously I read the tag of the sorry, train of thought, brain freeze, bro. All right, of the obviously the webinar. So I want to come over here. Let's go to gold. Okay. Kyle, remember what I told you earlier today? And I said, what did I say? Hmm? What did I say? What did I say specifically about that gap? That's exactly. So guys, let's talk about it. Gold. Okay. Gold. Um, I believe a lot of folks are, you know, they're a little wishy-washy about it right now. They don't know how it feels. Look, let me be the first to tell you, gold is not going anywhere, ladies and gentlemen. All right. If you were listening to anything that I said early on in the webinar, if you were paying attention, that's how I know if you're paying attention, because that information will be useful to you. You're going to know that gold's not going anywhere. As long as they keep pushing up that yield, pressure in the economy, all right, and or inflation begins to fall even further, which it's not. Regardless, either way, it's going to go up. Why? Because people are scared of devaluation of paper dollars. Central banks have been buying gold since maybe about 2017, where we're just now starting to see some of the effects. Is a confirmed bull trend. It's been confirmed. When that tells you that is an aggressive trend. Oh, but Lex, look, the RSI is screaming at the over the 80. What the is this guy talking about? He doesn't know what the. Okay, all right. The RSI was over here screaming over here too, right? What happened? It was screaming there too. What happened here? Oh, that means nothing, ladies and gentlemen. It means absolutely nothing. All right. So anyway, let's get into it. Now, it's a little messy weekly because I'm pretty sure you're gonna ask me what are your thoughts. Well, you see this right here? Let's isolate this for a little bit. It's gonna blow a lot of people's minds. What I look for when I come in the week. All right. When I'm coming down, I'm sitting down on a Sunday or Saturday. I want to know where's the weekly high and I want to know where's the weekly low. Those are the main two things that I'm looking for. Where's the previous week's high and the previous week's low? Once I identify that, I always mark them off. That's the high, that's the low. If I want price to go higher, what am I looking for the price to do? Just like I'm looking for the price at every single night when I come to a bias of where I expect that daily candle to go, is the same for the weekly. It's fractal. It does not change. I'm looking, if I want price to go higher, I want price to run below that midnight opening price, algorithmic opening price. I want to see it trade below there. Only then, and then only would I look to take a position. At the same time, it's going to be running out what? A level of liquidity. Okay. Keep in mind, it did trade higher. It broke through there, but it closed back into the range of this candle. Okay, I understand that. What is the higher time frame directional bias? It's up. It's up. Keep that in mind. And we did close higher than the previous week's, the previous candle's close. Keep that in mind. Okay, so what happened here? All right, that spooked a lot of people, right? Oh shit, gold's gonna go to the floor. Oh, gold's going to 3,000. Okay, yeah, nice. All right, maybe we'll see. Psych. No, let me stop. But what happened here? Okay, it's consolidating. It's gone sideways. That's what you would expect it to do after such a prolific run. A sideways market. This is just an accumulation phase, ladies and gentlemen. Do not be fooled. This thing is very motivated to go a lot higher, and it's creating liquidity. It's stacking liquidity as it's going. Okay, but you always want to buy from what? A discount, right? Not a premium. Okay, so what happened here? Now, essentially in my stories, I said, wait a minute. And this is before I even saw that. And so I said, wait, I missed something there. Wait, whoa. I said, we'll most likely see a bounce. Or I said that there's no way I'm going to bid it when it's here. Price was somewhere here. I said, I'm absolutely not going to bid this thing when it's there. That doesn't make any sense to me. All right. There's a clear inefficiency here. Notice something about that inefficiency? I spoke about it earlier. All right. The market will use that as a reference point. So what happens? The market rejects and sells off. Great. Let's come down now to like the 4 hour. See something here that you recognize? All right. So, this is where now it gets useful to me. This is where I like to use the indicator, especially on that 4 hour. When I start seeing divergence and I know that I'm in the directional bias of the trend. Oh, yes, I get very excited. Okay. And so forth. So I'm like, okay, well, we shifted. All right. We rallied, respected a down close candle. Let's get rid of that. All right. Traded back up, created liquidity, broke through this, traded all the way up there. Okay. Am I going to buy here? Are you going to look to bid there? No. All right. Obviously, that's a bid. You're going to look to bid there? No. That's not what a bid looks like. Well, what happens here? Again, what did the algorithm do? Once again, what did it do? Don't just take my word for it because I'm talking. What did it do? It came back and rebalanced this whole situation, right? And then went what? On another tear. Okay, now this is where I would say the retail space has got this correct, all right? Because let's just say I don't know anything about what Lex is talking about. Left head, right. That's all they see. Left head, right. Oh, inverse head and shoulder pattern. Oh, it works. Great. Even though you know that that's not what's going on. Okay, what happened here again? All right. Okay, after following this downtrend, market traded higher. Shift again. That's a break in the structure. That's telling me, that's indicating to me that obviously there's going to be more momentum coming in that directional bias. I'm in that direction. So now I'm going to stay Again, I want to stay locked into where the obviously the higher time frame trend is going. Okay, what happens? We shift, we break again. That's a confirmation there. Market does what? Return back to a level of discount. I'm not going to bid there because that's not what a bid looks like. What happens? Respects the down close candle, rallies hard. Okay, now moving forward here and now. Okay, some of you are probably long already, some are not. Okay, all right. Now you're probably asking, well, what would give me the confidence to have, let's say, I've entered that trade? All right, what would have given me the confidence to enter that trade? There's a few things that happened here. Number one, what direction is the higher time frame bias in? It's an uptrend, yes? Yes, we have that correct. Okay, number two, relatively before this happened here, all right? So let's just say if the price was right about here, all right? Now I'm going to teach you how to avoid these kind of situations, okay? All right. Now, let's say you missed this entry. That's okay, cool. All right, but on the daily, that's telling you that it hasn't been evenly traded. So what happens here? All right. Oh, what happened here? You have a price run. Okay, the price ran out a level of liquidity. Now, let me make this clear to you. For one, I do not like to purchase an asset or bid a market after they just ran out a fresh high. I don't like it because chances are they're going to turn it in the other way, especially if they're near a sensitive level. All right, where there has been a rejection before. The market trades back into the range. Now, mind you, okay, this is why I don't like the break and retest situation. I don't like it. All right, what happens here? The market breaks. So then now, if I'm a break and retest person now, what am I looking for? I'm looking for a retest of that broken structure. Okay, I got the retest. Time to go long. Absolutely not. What do? Pull it up a little bit, get you to chase, and then absolutely the market just plunges over. All right, but that's going against pretty much your rules. You don't like to bid above all highs. I don't like that. Just like I don't like to bid, I don't like to, I'm sorry, I don't like to bid above all highs, and I don't like to distribute below old lows, which is here. Do you understand what the market is doing essentially? It's claiming liquidity inside of, I was taking liquidity outside of the range. You're in a range. There's a range high, obviously a range low. What do? Make a range low, run it out, run it the other way, range high, run it out. Same situation here. All right, there's a series of highs here. What happens? The market trades past those highs. Again, now you have these scenarios where, okay, there's a break, there's a retest there. Great. That's actually a pretty decent run. But is that pretty much a high probability situation? It's not. Even though there's a break pattern here, but it's not going to be a high probability situation. All right. This is just pretty much feeding off of momentum again. All right. I just look at that as it worked in your favor. It's not a high probability situation though. Okay. You always want to take something that is coming off of a correction. Impulse, corrective. You know what I'm saying? Impulse the other way, corrective. Those are the higher probabilities because that's confirming that the market has changed a state of delivery somewhere up within the premium. And now I'm looking for the market to now obviously reprice itself back into a level of premium to then potentially have a trade set up to take me lower or higher in the respective trend. All right. Okay, so now let me exit out of this. Yes. Okay, so again, here and now, a little bit more detail here and now. I'm so like traditional with this stuff. I'm pretty sure there's a button where I could get rid of all that. All right, so now that you understand that, right? Okay. The market, and this, and I've been very openly about this. I don't like fair value gaps. I really don't like them. I don't. All right, because they're not uh highly a high probability situation, because the market can trade and rebalance the entire fair value gap or the entire imbalance. I don't care what you call it nowadays. They can just run through the whole thing. All right. I just believe that right here, you know, this trade right there at the threshold, we got lucky. I'm just be honest with you, got lucky. Got lucky. All right. Yes, there is a little bit of luck too involved. You got lucky there. Oh, what is this guy talking about? Yeah, because what happened? Eventually it came back and rebalanced the whole thing. But what was down here that caught my attention? I said, wait a minute. All right, you take a long here, it gets to the imbalance. This was Friday. It worked out. All right. It worked out for a little bit. Okay, got to the lower end. But what happened? What I said, wait a minute. Oh, no, no, no. I said, wait. Hold on, Lex. There's no candle closure here. What's going on? This is where I find white cloth very, very useful. All right? Because now you're looking for the lowest point of interest. The lowest point of interest down close or up close. And where is that? That's right here. Now, what happens when the market got down there? How much is that up by now? Interesting. An immediate response. That's probably the earliest possible entry you could have gotten. But how did you know that? How did you know? What would have given you the confidence to have taken that trade? I confirmed that, let's say the trend is up. Yes, I did. Relatively to the impulsive move, impulsive rally cycle. Yes, it is. All right. Has there been previous responses at that level? Absolutely. Take a look there. Guys, nothing is random in the markets. Nothing at all is random. All right. You will see here. This is, again, this is why I do not like patterns, essentially, because they will confuse you. What do you see here? Left, head, right. Okay, what does the textbook teach you? When it gets back to here, sell it. It got back to the neckline, Lex, sell it. Do you understand what's going on? You see, Sam family, this is how you now begin to wake up and use the tools against them when you see that. Oh, head and shoulders pattern. Go short. Take a position, puts in a little bit of profit. What happens? You probably got slippage here. Blows you right out. Well, Lex, why didn't that work? Because that's not the narrative. The narrative is not short. It's not distribution. It's not. The higher time frame is in an uptrend. So I should be looking for bids, not distribution. Still stick, even in the consolidative market structure right here, the market is still in an uptrend on the higher time frame. All right, so the probabilities of a long working out is going to be more higher than a short working out. Do you understand that? Okay, here I'm going to touch on now another situation here, all right? And I promise you, nobody was paying, I bet you nobody was paying attention to this. See something here? Seen that? Think nobody saw that. Nobody saw that one. Nobody was paying attention to silver. Silver is also a precious metal. Yes, it is. But what else is going on here? If silver is now trading at $35 an ounce, what is that also telling me? That's also telling me that they're afraid. Investors do not think inflation has retreated. That's telling me that inflation is coming. A second wave is coming. That means that inflation is here to stay. Because if there was no inflation, there would be no reason to raise the assets, or the assets wouldn't be increasing in value. It's very simple. If these are increasing in value, metals, especially in oil, that's telling you that inflation is on the way. Okay? Oh, but Lex, isn't supposed to dollar, if the inflation's on the way, aren't they supposed to raise interest rates and the dollar goes up? Absolutely wrong. No. Cannot raise interest rates. They're doing it for you. How are you going to raise interest rates without causing an economic calamity? How? How are you going to do it? Not possible, my friend. Can't be done. Not the way the system's set up. All right? Absolutely not. So, but back to what I was saying here. From a structural point of view, all right? I love this. It's my favorite part here. This is why this guys, this is like a macro situation. You're just seeing in a higher time frame. This is pretty much all I look for. All right. When I want to confirm something. Is there a sweep? Is there liquidity? Has liquidity been taken? Yes, there's been a sweep. It's fractal. So even on the 1 minute, same philosophy applies. Sweep, change in the state of delivery, rebalance, entry. Done. Stop or tolerance below the low. If I want to be wrong, I want to be wrong immediately. All right? That's being aggressive. Some people tell you, oh, stay away from them 1 minute, stay away from the 5 minute. They don't know what they're doing. Why on earth wouldn't I not want to be looking there when I could get the soonest entry as possible? I can get the damn near the bank's price. Why not? I used to resist that idea. I was a fool. So you understand what I'm saying? I'm not insulting anyone's intelligence at all. It's just, why wouldn't I want the best possible price? Why not? Okay, move along. So when this was shorted here, you see this? I promise you that would have spooked a lot of people. Shit, heck, it wouldn't matter, but probably spooked me a little bit. But again, once you understand the economic side of it, the macro fundamentals behind it, they just gave you another opportunity to bid it again. Why? Was there any structure broken here? Do you see any structure breaks? I don't. All I just see is impulse, either mitigation of a gap or down close candle. Impulse higher, reaccumulation, impulse, reaccumulation. I mean, it's safe to say it's in an uptrend, yeah? Duh. I'm talking to myself, by the way, you know? Duh, Lex. So now that it's obviously traded outside this range, well, okay. How would I look to trade this now? All this is past tense. Well, I'd like to see them stay up here. Ultimately, I do believe they're going to get to $50. I do believe they're going to go right up here. All right? They're going to get to $50. Will it happen this year? I don't know. But I'm firm believer that they're going to go there. Because I believe in the stupidity of the Fed. All right? To not take action now. I believe in their stupidity. I'm counting on their stupidity to come into play in order to get the price up there. So, well, what would this look like? I mean, look, we just started this month. Okay, it's been a pretty a good month. I mean, thus far for the metal, we closed obviously higher last month, and they just absolutely ripped straight through. So, I'm not sure if we'll continue to expand further here from now. I don't like that idea of it doing that. But what will get you into this now? Well, I practice what I preach. They traded back in the range, right? They swept past the high. Okay. Doesn't mean that they will stay there. but I don't like when the market trades past the high. All right, it's already taken pretty much that. It's closed high, but it closed back inside the range, the daily range. So we could come lower. Obviously, you see the market is sideways right now. All right, so what would set me up here for this now? Okay, let's just say following my, my approach, following my principles. Okay, I'm not going to take a long position here. This is foolish. Why would you? No, I'm going to wait for what? You have accumulation. I'm going to wait for manipulation. This will be the manipulation. Get people to chase. And then if it closes back inside the range, then that's telling me that the manipulation is over. Now I expect expansion. All right? But nothing can be done until I see the manipulation first. Nothing can be done. So obviously you see the price here now. Let's go down to 1 minute. The price has just been pretty much flowing sideways, as you would expect it to do. Slowly creeping down, but yes, all these sell stops down here, they're most likely going to run. All right. And then now I'll be looking at London. All right. Price is running down now, as it's supposed to be doing. All right. Chances are it's going to manipulate, and then there will most likely be a reversal. But understand me clear. Understand me very clear. You're pretty much late. You're late for this. Oh, but Lex, you said you don't like bidding above a whole high. Yes, I did say that. Absolutely, I said that. So keep in mind, there's a lot of inefficiencies down here. Can the market get all the way back down to this break pattern here? Well, absolutely. Sure it can. Why not? All right. Does this, again, like I said, does this look like a buy? I mean, a buy to you? No, it does not. You don't see this, so that's not a buy. What did you see here? I'm trying to keep it visual for you. Impulse, what did you see? A correction before the next impulsive move. You saw a correction. So I'm asking you again, is that what you see? All right. Is there a correction here? There is no correction. So chances are it will probably go sideways. All right, before getting ready to go again. Remember, this is a very serious level that it broke, an extremely serious level that the prices broke. But then again, just following up one more time. All right. There is a range, right? We can all agree that this was a range. Yes. This was a range. You pretty much had the lower end of the range, upper end of the range, market bounce, creating liquidity. Now, granted, they could have ran this. They didn't, though. But what did the market come back essentially and do? The market essentially came all the way back. I'm pretty sure this was a very aggressive news event. Manipulated, took, obviously, the external liquidity and ran it right back in the other way to go take the what? External top liquidity here above, which is considered relatively twin highs. Anyway, you have to understand the little games that they like to play. All right? It's to get people to chase. Okay? So understand where you are in a range, because why a range is so important? Because more than 60% of the time, the market is ranging. So you understand you're trading a consolidative ranged market. Just like right now with Euro, it's pretty much sideways. But again, the motivation is for the price to go eventually higher. But we can all agree it's sideways at the moment. All right. So anyway, so Kyle, man, that's pretty much what I have for this weekend, dog.
Bro, I need everybody to drop a 7 in the
Thank you,
chat.
man.
Honestly, bro, I'm gonna go ahead and turn on my camera real quick. I just want to say, from the chat, even from myself, man. Hope everybody just drops like, man, we appreciate you, Lex, for hopping on here and taking time out of your day on a Sunday night to really just
Hell
come on
yeah.
here.
Every time, bro. It's all good. It's all love. Like, let's just, I want you to see things from my end. That's how I just view the market from my lenses, my eyes, how I'll see it, and just compile the data. And then we just make a decision like, okay, what are we doing? All right.
Yeah.
Once we figure that out, then obviously the patience, wait for the market to come to us, wait for the right opportunity to present itself. That's it. Take action. Done.
Yes. No, for a
Keep it simple,
fact.
guys. Don't complicate stuff. Don't do that. Once you start thinking, oh, what if it does this and if it does, listen, bro, we're not trying to figure all of that out. Is there something that we can identify? Yes. Okay, good. Do we have our checkpoints? Yes, we do. Time to take some action. That's it. Keep it simple.
I don't know if you're on the stream, on the comments, somebody just asked, what's your Instagram? How can they tap in with you and continue to just
Sure,
grow?
bro. It's Imperio Medusa,
I'm going to type it right now in the chat.
Yeah, man.
Yes,
Appreciate
everybody
the
go
love,
ahead
man.
and follow him. And I'm going to tell you guys right now, man, like, this guy doesn't have to be on social media. When I tell you, there's been loads of people, countless of people that don't have to continue educating and don't have to keep doing this. I mean, he told me that his son got sick, leading up to this, and he was taking care of him all day. And, if I'm be honest, like, majority of us wouldn't have even made it to the call or even just, like, continued to go full force and pouring in value into you guys. So, again, everybody go follow him on Instagram. I dropped it in the chat.
Appreciate you. Appreciate it, guys. So, guys, let's have a great week. Let's wait for things to get to those price points and take action. That's it, man. All right?
Yes, sir. Let's get it.
I love
Yo,
y'all, man.
appreciate you
y'all.
again, my brother. We will see you next week. The recording is on the channel as well. So, this right here, I'm telling you guys, even Go Live used to charge a monthly subscription, and I never used to be able to get access to the recordings after that. So, you guys are blessed. It's going to be right here on YouTube. Take advantage.
All right, man. Have a great one, guys.
Let's get it.
All right.
Yo, what I will say is, go ahead and tag us on your story as well. My Instagram is Kyle Hustles. Our company page is profitsociety.co. And I went ahead and dropped Mr. Lex Waves Instagram in the chat as well. So if you got some value from the stream, go ahead and follow and tag us on your story. It definitely helps us grow the stream. And go in the link in the description and sign up for Hanko Trade. I'm gonna go ahead and drop the link for Hanko Trade right now. So there's a link for Hanko. We're gonna get you guys inside of the group. But let's get it. The link is in the chat. Go ahead, get started today. The links are also in the description of this video. And the recording will be here right on YouTube at all times. So I appreciate each and every single one of you guys. Tap in.
I'm done cleaning up your mess. Found myself in my regret. I've become a little stronger now. A little stronger now.